as well. All right, hello everybody. Welcome back to the RationalInvestor.co's. What the hell is this? This is our broiler chicken show. Cluck, cluck, cluck. Actually, people were putting out some really funny pictures. Jeremy's got a chef that's ready to carve me up like a holiday turkey. Anyway, welcome back, everybody. It's about 10 o'clock here on the West Coast. We had a pretty light day of team meetings, so I don't think I've done a broiler chicken show in probably a few weeks. So what the hell? Why not? If anything, why don't we just, we'll take a leisurely walk down the market and I'll just point out things that look interesting to me. I do see a few people have asked me to look at some more ideas, so we'll take a look at some of your ideas here. And, just so you're aware, Brian is active in the market, and I think there's some fantastic opportunities out there. And here's an example of a fill that we got overnight. And this is just, it's so cool to see this stuff play out. But really, all this is just simply an order to try and get in off the bottom end of the range here. Good old double bottoms. Everybody loves them double bottoms. In fact, actually, this one's pretty big. It goes all the way down, up, down. You could even probably do a nice little retracement in there, pick some levels, get your orders working. So it shouldn't surprise us to see that this bottomed in here, and then fast forward to today. Really interested in this level too. I think that's where I had my bid working. You see that that's basically where the market bottomed today. Sick fill. So really pleased to see a lot of these little coins. We finally, this is what 2 months of getting rid of the fluff and the idiocy of the market looks like. I know it's been painful for everybody. But if you positioned yourself correctly, I think you're now starting to get some really, really fine looking buying opportunities. So where should we start? And it's cool. We'll come back to him in a bit, as we go through these altcoins. Just coin after coin after coin. Here's just yet another example of them just washing out the fluff and the market getting ready to base, start the bull all over again. Cool momentum in volume here. And I think actually his OBV study shows that. This is everything that we teach, guys. So, lots of fun out there shopping if you have the ability. Why don't we start with, and actually we'll talk about that in a bit too, but what I wanted to start with, I guess I put it away. All right, well, why don't we pull it up here? What is it? Chart setups. Once upon a time in a stock market far, far away, it's interesting how breadth here, we actually told you about how breadth when it perks up like this, you see how the moving average takes, the slow moving average takes some time to finally turn. And then when it finally catches up to the short, the trade's over, right? The trade, short-term traders is right in here, waiting for the medium turn to turn back up and catch up. And then, of course, as the medium term catches up, the short term actually starts breaking down. So here we are again. Short term has broken down, and the medium term is just slowly rolling over here. And if we look at the stock indexes themselves, here's the S&P. You can see that battle, just ridiculously embeddedly overbought. Market goes parabolic, just like we saw out of Bitcoin last fall. And then it breaks. And then usually the break is AB equals CD. We talked about options expiry, and it's almost criminal. When you know this information, it's shocking when you look back over time to see how blatant this market manipulation was. But in essence, we had a highly incentivized Wall Street to make sure that this market closed at or above 275. So they engineered that. And what do you think, guys? If you're a stock investor, are we getting bullish momentum signals or bearish momentum signals here? It's looking a little tough, I'll tell you that much, by crackers. we don't actually have an M in Willie. Do have a pretty well-defined M here in MACD, and look at this M in OBV. And we always say that momentum in volume is much stronger signal than momentum in price. So clearly something is not happy here. AB equals CD kind of thinking, we probably need to come down into this sort of 245 area, we'll call it, on the S&Ps. And if we look back at the chart where, look left, you guys have heard me talk lots about that before. Where do you find key support here? And I think on balance, right, we can go zoobity zoop. We can see there's a big old gap in the charts right here. That ought to get addressed at some point. You can even, for reference sake, horizontal support and resistance. You can even put a level right on that gap. Isn't that interesting how that gap lines up perfectly with this AB equals CD objective? Great example. So if anything, the interesting thing is if you are interested in being long stock, all they're doing is they're just simply bringing the market back down to the original bottom here. We'll see how the market goes as we come into these levels, but my hunch is there's probably a trade somewhere in here. So keep your eyes open for that. Looks like we're about halfway to that objective, so there's still a bit more pain to go. And this is the great sort of analogy we like to use, where we as technicians, we can see what's going to happen. We can see the future, but you just never understand why. What's the why? Why is this going to happen? That's, where the fundamentals sort of fit into the equation. A lot of you probably new to trading, haven't lived through this kind of environment before. It's been a long time since we've had trade wars. One could argue that the crash in '87 was nothing more than the then Secretary of State, Secretary of Treasury, James Baker, coming out literally the weekend before the crash and saying that his administration was not going to defend the U.S. dollar. And all hell broke loose. The following Monday, there was a windstorm in London, and the markets were locked up for the Europeans. So then the Americans opened, and it was just free fall. So, we're back into those kind of days. And frankly speaking, I don't think anybody on the site even remembers those kind of markets of trade wars. It's been a long, long, long time since we've lived through the days of trade wars. So this should be a really good educational experience for all of us. It is interesting, too, how a lot of site commentators and people that I talk to on Twitter and stuff, they almost feel like the gentleman who's running the United States or in the executive office right now has that position, is very nostalgic for the days of like Eisenhower and the Cold War, and, allies were allies and enemies were enemies kind of idea, and the generals were in charge and all that kind of talk. And so, it shouldn't surprise us that he would ideally like to take us back to that kind of world. I don't know whether we can go back into that world, because really, my perception is that we live in a multilateral world, not a bilateral world. So it's not, it's, the interesting thing, one might argue that the powers that be knew that there was a recession coming, the end of the economic cycle in 2000, 2001. And the easiest and best way to get your country through a recession is to go and generate a war somewhere, so that you can generate a whole bunch of economic activity based on the fact that, hey, we're at war, and, throw the budget out the window. We got to go fight a war. And I don't know. You think about where we are in the economic cycle. Could we make an argument that that kind of scenario is trying to reexert itself, and could we have a war coming up here in the next few years. The interesting thing is the macro voices, and I tweeted out them. They were all going on about the price action in crude oil, and the price action in gold right now is very much indicative of a war sort of footing scenario. So it's fascinating the times we live in. I'll tell you that much, by crackers. I see the horn is going off, but unfortunately, I'm in a call right now, so I'm not going to be able to answer that. Anyway, for whatever it's worth, I think, definitely we have now two legitimate and really with reload zones, and we could probably throw the profile on here, and it probably supports that idea as well. You see where the POC is here, just on this range. You can see this big old valley here in the profile. So this, if anything, this should be a really good lesson for anybody watching this. Just watch how price plays out over the next month or two. My hunch is we have to come back to the POC and basically fill in a lot of this profile. And, it's interesting, too, how they left such a violent gap right at this level. Notice how that will be the top of value, a little bit of a notch here. So in essence, it looks to me like they're going to dump the market. And, I'm hearing the scuttlebutt about why the market's dumping is all this trade war talk. But, we've probably been here long enough that you guys all just see that this is very Wyckoff, and all they're doing is they're just backing the market up against previous support levels. They'll get, of course, the public to be panic selling through this. But you can clearly see that this is basically where the institutions are long. So those sell orders are basically just going to go right back into the institutions from where they're already long. Does that make sense, guys? And what's cool, especially about this gap right here, is wherever this ultimate bottom is, and you see how the reload short zone and good old Mountain Man, he's going to be just sitting there at the top of value going, all right, come to me, come to me. And of course, we've got this nice juicy price gap here too to also stop the bull. So it's never easy to trade these trades. Don't get me wrong. And this is, of course, why we have to build a plan and all that kind of stuff. I do like the idea that we'll be coming into trade location down here. So if you are interested in stocks, get your short list all ready. And as the market dumps down into these levels, we want to be looking for divergences and looking for, signs of candlestick reversals and W's and heads and shoulders and all that kind of stuff. And unfortunately, if you are long stock, it's just a big hurry up and do nothing right now. If anything, kind of like crypto, which we'll get to in a bit, I like to find good names that I want to be a buyer of and use, if it's in crypto, use Bitcoin weakness to try and go and accumulate positions in our names that we really like, that are kind of soft because Bitcoin's bringing the whole market down. I would argue the same thing here with the stock market, right? Let the broader stock market malaise artificially push prices down so that your ideas that you're interested in come into buying levels. And an example of that, I think, our RSP group, we've got sort of a short list of ideas that we're really interested in. I really like the idea of buying into this Alio Gold. It looks like a very interesting name here. I would like to let, and if anything, the gold strength over Friday artificially bump this up, but I would like to let the market weakness let this thing come down and fill in these gaps and let me buy in some stock here. So, this is a V bottom. I don't really, it's not like, oh my God, it's going straight up from here. I can be patient. For those that are interested in the crypto space, does it make sense if you play the stock market, does it make sense that we're going to use the broader stock market weakness to drive this thing down to fill in these gaps? And we should be in there buying against these lows. Does that make sense? Hope so. There's also, it's interesting. We had this play we talked about on Thursday. These oil ETFs just rocking and rolling. So here's an example. If the stock market is really weak, we might even see oil come off here a little bit. And so you can be in there if you're interested in this trade, right? You can be in there hunting for this gap fill on the weakness in the broader market. Don't chase up here. And then the flip side, right? For all those guys who want to play the exact opposite side of the equation, you can play the stock market short play through the inverse ETFs. And we had one site member, I think Grim, who took a long off of here. I think that was a bot level for him off of this level here. Don't chase, right? That's silly. But you can think about long setups on anti stock market proxies like this dog. There's a couple other names that I'm interested in the stock market too. Look at this violent reversal that tried to come in. I don't know whether it was a key reversal or not. It doesn't look like it. The high here was 449.90, 445 there. So we closed at 4499. Wasn't quite a key reversal. You could see that it could have been if they had just finished the day above that level, but somebody just didn't want it to. So this is an example of a company. There was like a massive insider purchase in this reported on FinViz. And what do you think, guys? Does it kind of make sense why the insiders are going in and buying their stock back down here? I happen to see this reported on FinViz. There's the original double bottom down there. And look, here's the wicks and tails, right? And look where the price is right here. I don't know whether this is the bottom, but we've played this game long enough. What do you think? If this was an altcoin, would we be interested? So there are lots of names out there to consider. There's no doubt about it. But you have to be buying when others are crying and selling when others are yelling, and that's not easy to do. So broader market, it definitely is. It's not as happy as it used to be. That's for darn certain. Where the hell does this damn charts go? I think it was over here. Yeah. I suppose we talked about drum beats of war and all that. Notice our Japanese yen trade. Isn't that interesting? When this triangle fired, it was just like, well, I don't know if it's going to work, but gee whiz, W within W triangle breakout. They're usually pretty powerful. Look how that son of a gun is worked up. It's almost basically tagged the target now. So, this yen trade has just been rocking it. And I've been saying all along that if yen is this strong, then we really should see some performance in gold. And gee whiz, over the past couple of days, look who started to come back to life. So it's nice to see the gold, for the gold bugs. And the irony about gold is that I think you can make the argument that, hey, if Bitcoin can go from 1,000 to 20,000 in less than 6 months, there's no reason why gold can't go up, 10, 15, 20,000 bucks. And remember Dr. Pippa. What does a world? And now she's upped her number to 20 trillion. It's not 18 trillion anymore. It just added another 2 trillion. Fuck me. So, what does that world look like? So, it's interesting to hear the anecdotal talk out of Thomas through his, because keep in mind, he's in that business. So if anybody's going to know the underlying business, and I've told you guys this before, if anybody's going to know the underlying business, it's going to be the people that are in the business. And for some reason, there's something really funny going on with central banks and liquidity and concerns over having just raw, pure gold bullion. Any way you shake it, this is, if you want to diarize this, this chart pattern is what's called a descending wedge. And descending wedges actually usually resolve bullishly. So really, it shouldn't shock us that this is actually doing what it's doing here. I'm a little perplexed that they left this very noticeable notch on the profile here. That is a bit perplexing. I wouldn't even be surprised if we run up, tag this trend line from the underside, and then come back down and fill in the notch. But no doubt about it. And remember on last week's videos, we even kind of talked about W's, and not really the best looking W and Willie there, but I thought there was one. Cute little W in OBV, and of course this nice double divergence that's just been confirmed on MACD. You know, the short-term momentum is with this trade, no doubt about it. You know, that's one of the reasons why I kind of like that Alio gold. I think it's not a bad idea to take a good look at some, not necessarily the seniors. The seniors kind of look wishy-washy. They'll probably follow the gold index itself. But a lot of the sort of the mid-tier names, and actually for the RSP group, anybody watching, especially Mike, if you watch this later on, this is really important. When it comes to trading the resource companies, the key you're looking for is companies that report expanding production. So when we went through the 2000 to 2008 bull market in oil, a lot of oil stocks made a lot of people very, very rich. And the key all along was follow the names that are expanding production. Like Spencer, I see you here. Hey, buddy, how you doing? I don't know whether you're running your RSP, but you probably should be. But the key is if you're going to play these resource names and they're sort of mid-tier, they're not cheap, they're not venture cap like VCIM, they're sort of middle of the road. You want to try and play that longer term trend. The key is the company reporting expanding production? So I thought it was really interesting the other day when I looked at that Alio Gold in particular, and they were reporting that they were going to be expanding production. So when I saw that, I was like, "Ooh, that's an even more bonus." So just a heads up to you for the community, those people that are interested. It's interesting that I think some of the short-term weakness was they're actually doing a merger with another gold company, so I have to take a look at that. Also, too, for the gold bugs, this is a great thing to read. I mean, this is fucking the shit, man. Our magic number for gold stocks is we want to see them report at least 3 grams a ton over a minimum of like about 3 or 4 meters. So it's a nice solid find. Here we have 6.5 grams a ton over 19 meters. That's a pretty damn good find. I don't know whether it's at depth or whether it's at surface. I suppose if it was at surface, this thing would have just taken off like a rocket. 367 meters to 386 meters. Yeah, so that's a little bit underground. You're going to have to put in a pretty big mine shaft to go down and get that gold. But nonetheless, you know, this is a really good simple analogy of what old timers in the industry like to look for is we want to see at least 3 grams per ton and over at least 3 meters. So this was a pretty darn good report. So you know, this is a really interesting story. I think I'm going to be watching this probably for the next little while. It's a really interesting little gold company. It's funny. I was talking to Dav over the latter part of the week, and he said he's going to go buy another whack of gold here. So way to go, Dav. Dav is the ultimate gold bug. Interesting to look at silver. We see sort of same sort of WE type pattern trying to come in on price momentum. It's kind of wishy-washy. Cute little W trying to come in off of the original lows here in the OBV and the volume. And you can see the impetus. Somebody stepped up and did some buying here on this hammer day too, of all days there. I don't know whether I have as bullish an outlook for silver. This to me looks more like just a simple wedge. And at some point this will resolve itself. It's probably predicated on what the economy is going to do. Because I think I talked to you guys about this recently. The gold silver index to me is suggesting that the economy isn't going to do so hot. The gold's taken off here, but silver really isn't. And you can see it in the gold silver ratio. This thing's trending hard in gold's favor. And if it breaks out through the top here, then it kind of, to me, says that this is, again, remember we talked about drum beats of war and all that kind of stuff. This talks to me that's more that kind of environment rather than, real strong industrial demand for this stuff. Yeah, just keep that in mind, guys. All right. So that's sort of what I'm thinking about broader markets. Stocks, they're definitely in the shitter right now for the time being. And I suppose you could argue just like Bitcoin. Was it really? Is it natural? Is it expected? Is it normal for this thing just to keep making higher highs and higher lows indefinitely? I mean, you can kind of see the parabolic nature to this. It is interesting how we did come up to a 1.618 here, eh? And just lost it. Good old fibs for the win again. I don't know. I mean, I can't personally look at this and call a top, but I did hear some guys on Twitter and stuff talking about an island top on the NASDAQ. I don't know whether I really see that. To me, this still looks just very V-toppy. And they're just running the stops. Actually, be really interesting to see how the price acts right into that. Oh, yeah, there's a gap there. Well, son of a gun. So that's probably a big magnet there. So when the S&P dumps into its level, bottom of value, there's a little bit of a node here. Maybe we panic into this tail here a bit. And of course, Brian and his crazy candle body lows. I'd be very interested in hunting that level right in there. So I don't know. I don't know whether I'm ready to call a top here, because what this might be is, I am definitely ready to start thinking about a top, for sort of fall. And, I'm a little disappointed we're not making new highs, but hey, the market's going to do any old damn thing it wants. Maybe what this has to be is some massive head and shoulders pattern. So we come down, make a base, then maybe come back up top and then break down. So now we're talking into the summer here. So maybe we have to do something that looks along the lines of that. Really, if it's the same duration as this, that might actually take us into the end of the summer. I could definitely see a scenario like that. So actually, let's keep this on the screen. Just watch for this, because I got a funny feeling it's going to look something like this. And all our RSPers, we've been watching, or not watching, but talking quite a bit about building short positions in things like Canadian banks and stuff into the fall. And I would be looking for this kind of scenario in those stocks as well. So, we'll keep that on the screen. Let's see how that plays out. Nasty. Whoa, gee whiz. Did you guys see? Look at this nasty M in MACD there. Wow. Holy divergence, Batman. So you can definitely see, if anything, at the very least, what we have to say is the bull is on pause. And, considering the year and, let's go take a look at that yield curve. What's it up to these days? Where is the yield curve? Got it in here somewhere. I think I started with a D. US, there it is. Oh, shitty. Wow. Not going to take much for this thing to invert, eh? So, Spencer, what do you think? Spencer's been working with me for a few years now. Can you now appreciate the change in the yield curve? We sort of slowly watch this thing. Even just a year or so ago, we weren't really in that kind of trouble, but look how this thing has flattened out. And you see the flattening process. I mean, that's remarkable. So the Fed has actually said that they want to raise rates 3 more times, right? So, it's not going to take much now. Yeah, usually about 6 months. And usually the stock market breaks. That's the initial. And then usually what has to happen is that the recession itself usually is sort of declared the first or second quarter following the stock market break. So I could very easily see that, say, January 2019, a recession is officially declared. And I could very easily see into that summer rally, head and shoulders on things like the NASDAQ, that, we're only still in March right now. So that's like March, April, May, June, July, right? That's another 4 or 5 months. If this thing starts tipping over at all, and this is where we really want to keep a close eye on the bond market. That's this guy here. Oh, and hello. Oh boy, look what's going on. Can everybody see the bullish divergence in the bonds? So price momentum has already started to turn back up. And lo and behold, look at this. This is a W with a nice polite little fuck you right at the end of it. If anything, what we probably should do is let's keep a close eye, for those people that are interested in the bonds. Let's keep a really close eye on this level right here, right? We're probably going to have to roll over, come back down. Usually on moving average crosses, you get a bit of a kickback. I think we've talked to you guys on the site about that before. So maybe we get a nice little bump up, which forces the moving averages to cross. And on that cross event, you get your kickback. And for those people that are interested in the bond market, right, that's going to set up reload zones, which is going to set up off of candle body lows. And that will produce our test of this low. Then if that test of the low holds and we turn back up, then we got ourselves a W. And what's interesting is if we look at this on a clothesline basis, I think the W is already in. Yep, there's the W. So interesting how all this shit's coming together, eh? What's going to cause the yield curve to invert? Well, we know that the Fed is hell bent on raising short-term interest rates. And now the long end of the curve, the prices are bottoming, which means that they're going to start going up, which means that these rates are going to start to fall. Do you see how that works? Let's ask somebody here. Who's here? Hey, Gabby. I haven't seen you around in a while. What do you think, Gabby? Does that make sense? Do you see how the yield curve can invert there if we have this bottom come in on the bond market? This is the 10-year note. So this is going to be sort of right in the sort of middle, right in here. We could probably even look at like the longer dated bonds. Let's see if the US, are these guys already bottomed? This is US. This is the, what the hell are they calling this? US Treasury 1 to 3 year, blah, 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 what a mess. T-bonds, that's what I'm looking for. Okay, now I'm confused. I guess they went and changed all these symbols. I think actually it's like ZB now. T-bonds, there we are. Jeez, trying to figure that one out. Okay, so here's the longer end of the curve. Oh, hello. You guys see that the longer end of the curve is actually already bottomed. So Jeremy, remember when we used to do that weekly spreadsheet? And now what we should be doing, that weekly spreadsheet. I wonder where James is. We haven't seen him around much lately. We can actually start now. You can see that this bottom isn't really that good looking of a W off the weeklies. So I don't know if we are quote unquote there yet or not. But I definitely could see this rally up into resistance here, which again is going to force downward pressure on these. And if the Fed is hell-bent on raising rates, just watch for it, guys. I'm serious. We're getting close to the end here. Quite remarkable to watch all this play out, eh, guys? So interesting stuff. And now the last question, to put all this into perspective, you may be looking at this and going, well, the Fed doesn't have to raise rates, do they? And here's the problem, is that if we actually go and look at the short-term interest rate markets, I know a lot of people, since the creating of the U.S. Federal Reserve System in like 1914, they believe that, there is a there is a controlling mechanism by this sort of the lender of last resort, and so as a result, the market is really controlled by the central bankers setting short-term interest rates. But actually, that's not true, which is kind of funny in a weird sort of way. And the easiest way for you to understand how untrue that is this thing called the TED spread. And the TED spread historically has been the relationship between the corporate interest rate market on the short end and the government guaranteed, or the Federal Reserve's and what we used to call the T-bill rate. And so that's where you get TED spread. It's the T-bills minus the corporate interest rate vehicle, which is called the euro dollar, which of course just confuses you new people to trading all to hell. I thought the euro dollar was that thing that Jeremy uses in Europe. Nope. Euro dollars are actually U.S. corporate interest rate market. So go figure that one out. And if you want to see this stuff in action, it's not like I'm making this shit up. I mean, you can just go and I think actually CME might even have that contract listing. Go in here and we go to, where are we here? Data. And we will, I think it's data. Or maybe it's trading. Here we go. We will go euro dollars. There it is. This is actually the short-term interest rate market for the world. You guys all remember the LIBOR, right? The London Interbank Rate. Well, technically, this is sort of like the U.S. default same sort of thing. It's called the euro dollar. And it's a big market. There's literally like trillions of dollars. Like these are just daily volumes. Each contract here, guys, is for $1 million. So what do you think? Is there some serious money floating around here? This is the December 2018 contract. That's just today's volume. 427,000 contracts. Anybody do the math? At $1 million a contract? What kind of money are we talking about here? And that's just today's volume. That's not the open interest. There's some serious money that goes through this market. So the point that good old Uncle Brian's trying to convey to you guys is that, yes, to a certain degree, central bankers do control this short-term interest rate market, but it's almost like it's kind of like, like the President of the United States of America. Technically, the President of the United States of America doesn't really have any power. He is supposed to be the ultimate lobbyist on behalf of the people in front of the U.S. Congress. And his power, quote unquote, is what they call the power of the bully pulpit. Or, he basically convinces Congress, you must go this direction. You must go that direction. It's the will of the people. Anyway, the point of the matter is the corporate interest rate market is, of course, totally dominated by supply and demand based on the economy. And if the spread between the corporate interest rate market and the Federal Reserve System's interest rate market gets too out of whack, then all hell breaks loose. The TED spread is your easy guide to tell you how that relationship is going. But we have to construct it a little differently. It used to be T-bills, which were the sort of Fed's proxy for short-term interest rates. Now they've actually changed that, and they have what's called the Fed funds. Or in essence, we don't even operate through the US government anymore. The Federal Reserve itself is setting this proxy. So, you know, TED spread, that the wording has to change. So it has to be like the Fed spread now. Isn't that interesting? I just realized. I bet you that was done on purpose. The Fed spread. I didn't even notice that before. And all you guys are like, so where's the joke? So anyway, the point now is we use the Fed funds rate to give us that idea of short-term interest rates set by the U.S. Central Bank, and the euro-dollar market we still use to tell us about the corporate interest rate market. And the great part about it for you guys is you actually get in your life, you actually get a really, really good lesson in what happens when these spreads get out of whack. Did anything of particular note happen in 2007, 2008 in the global economy? Was there anything that happened? The financial asset crisis, right? Dun, dun, dun. What was really cool about this was I remember I used to watch Wall Street Week with Louis Rukeyser religiously, and through that time, we even had the U.S. Secretary of Treasury at that point, his name was James Snow, go on Lewis's show, and he himself talking about the credit spreads and the fact that the Fed had interest rates going down, but the credit market, you couldn't borrow money to save your soul. He went on, you know, like shows like Wall Street Week with Louis Rukeyser pleading with Lou and all his buddies to turn the spigots back on, because, you know, the sad part about it is those are the guys who actually control Wall Street, right? They're all the bankers and stuff. And of course, they wouldn't do it, right? The euro-dollar market, the market's proxy on short-term interest rates, started to disconnect. And the old adage is when this ratio goes above 1.00, we are officially in crisis. And you can see that you can see the spreads started to crank up, and, you know, think about higher lows and higher highs. You can see that back in 2007, well ahead of the event, the market was saying, hey, there's something not right here. Right. And then it backed up and it said, okay, well, maybe we're okay. And no, we are still not happy. And then, of course, later on in 2008, Lehman Brothers, AIG, all that nonsense, the market goes into free fall. And then, of course, recession, blah, 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 blah. The point here is, look what's happening now. You can see that the corporate interest rate market shows absolutely no signs of bottoming. And it just on Friday made another new low. And the spread between the Fed, what they're charging right now, and what the corporate interest rate market is, can you see how that spread is widening? And is there any sort of letters of the alphabet that maybe we should be paying attention, looking for here? And this is the sad part about it, right? Is that this is, you know, most of the public, they're completely unaware of this. But in essence, the market is actually speaking to us. The market is saying, hey, there's trouble. So then we go back to the yield curve. Does it make sense that the Fed has two choices? They can either say, to hell with you, corporate interest rate market, we don't really care, and take the chance of the TED spread going into crisis, and we have another financial meltdown. Or do they follow the corporate interest rate market, keep the TED spread relatively calm and happy, but drive the yield curve into inversion, which is going to send the market into recession? Do you see how it's a no-win situation either way? It's you're damned if you do, and you're damned if you don't. This is probably, you wonder why a lady like Janet Yellen's, all her hair is white. My hunch is by the time this current Fed governor is done, his hair will be all white. He's screwed. He's actually walked into the absolute, it's almost like a worst case scenario. If he raises rates, along comes recession, market tanks. Usually markets fall by 50% in recessions. If he does nothing and he keeps rate low to try and prevent this inversion, then the market seizes up, the credit market seizes up, and we get like financial bankruptcies, so AIGs and Lehman Brothers and stuff. This is a tough situation for these central bankers right now, I'll tell you. And hopefully also too, what you guys can see here is, wow, now I can understand why these fear cycles are so insane. And the end of, business cycles and economic cycles. This gets pretty tough. It's not easy sledding. And usually, the worst part about this is, like we just said a moment ago, usually these things fall by about 50%. So if we go and look at stocks right now, if we look at the S&Ps, for example, and we just zoom out, it kind of, we've been talking about this a long time, but it is interesting how the top here, 280, we'll call it 286, whatever, 287. What's 50% of that? Well, that's like 140, 150. And all that will do is just bring price right back down. I guess there was Trump's election right in there. Yeah, right in here. So my hunch is, if it's credit crisis, maybe we have just a quick stab down into value. That head and shoulders on NASDAQ and stuff plays out. If it's outright recession and they got to completely hit the reset button, you can sort of see where this is probably where most of the public is going to panic dump. And of course, we all know this as a big fat muak. If anything, for this to be natural and healthy, this has to be filled in over time. So, put everything together. It really shouldn't surprise us what's happening. And of course, this is the shitty part of the cycle, for the next probably 3 or 4 years. It's going to be tough sledding here until we get into the next growth cycle. Wow, there's a nice, happy, fun, happy, joy comment for you, eh? All right, well, and I do see, okay, well, what about Bitcoin? I think if anything, I think Bitcoin's back to sort of being a leading indicator now. In that I think that Bitcoin is gone through. In fact, I might even argue Bitcoin's sort of like right here now in its correction process. I don't know. I mean, maybe they just clean this stock market up right in one fell swoop. Who knows? But I think in essence, if we go and look at like the Bitcoin chart, we're going through its very natural correction. It is interesting when we look at Bitcoin. This was actually a pretty important week, and seeing last night's failure, because we were heading right up to back up to the top of this candle, and I went out, I think it was after class yesterday, went out for a nice walk, and the market was feeling quite uppy, and it looked like, we were, going to try and close out. We actually moved through this high next week. This confirms an inside bar, and this scenario of a nice counter trend rally back up into the high teens is actually back on the table. Last night, we kind of gave it up last night, which was a bit disappointing, but that's the way it goes in trading. So I don't necessarily think that we have, the bullish scenario set up, but if we can hold these lows and tick up through this high in this coming week, well, it's back on the table. But ultimately, and this has sort of been the message I've tried to convey to our audience. I'm still thinking we got to head back down into this area here. I know it sucks, but that's just sort of my hunch. Here is, if I'm not mistaken, well, actually, I think maybe it was here, but I do remember Goldman Sachs came out and recommended to all their clients to buy Bitcoins at $2,000-$3,000 a coin. So I definitely think Goldman has a vested interest keeping the price at or near those levels. And it wouldn't surprise me too, 88.6 off of 20,000 would basically take us right back down to that 2,000-3,000 area. And, this is still a long, long, long way of cleaning itself up. I see Mark's not overly impressed with that commentary. Sorry, sir. Just going to call him as I see him. I know you guys all want me to go rah, rah, bull, but I just don't see it just yet. That was interesting. Well, maybe we'll leave that for another day. Yeah, I'm thinking over the short term, I really, really like a stab right down into this triple harmonic level here. We've got not only this big bat working, it's against candle body lows. It's against an original institutional fingerprint down here. We have previous lows here defending us as well. I don't mind the idea of taking a real good shot right down here. And we'll be watching for this. But as I said just a moment ago, you got the bat. You also have this AB equals CD. It's not perfectly symmetrical anymore, so I can completely understand some people having a jaundiced eye over that. But nonetheless, just the straight distance, that is an AB equals CD. And as well, we have this AB, CD also takes us into that exact same level. So I don't think that's an accident whatsoever. I also noticed too, if we just draw simple trend lines, and this is the Japanese market that we're looking at here. If we just draw a simple trend line off of this peak and this peak, notice how we came right up against that on that rally peak and failed. And here we are here, coming back against it. Now, the good part about that, 1, 2, 3, if we can actually resolve through this level and get up through this high, that actually is a short-term bullish setup. And and remember, we sort of showed you on the weekly chart that is this inside bar reversal, and it actually does imply that this thing could rock and roll here. So I'm not going to say it can't happen. If anything, what I'm going to say here is this is the business of trading. Number one, we're kind of in no man's land here. We're not super cheap. We're not super expensive. And so it really shouldn't surprise us that we spent a lot of weeks just bumping and grinding in this range, just driving everybody crazy. If we can dip down against these lows, then we start getting back into reload zones. And if we get nice little inside reversals here and things like divergences and stuff off the lower time frames, and let's rock and roll, right? Take your long shots. But right now we're at kind of an awkward place on the charts. So, if anything, what I'm thinking right now is this is sort of like, strong convictions, but loosely held. My strong conviction right now is that we need to come down into this level to finally finish this ultimate correction wave here. But if the market disproves me and can get up through this high, then that sets up we're not calling them Iran Jeremy's anymore. We'll call them Leanne James, I think is her last name, not positive, but LJ's. That would be an LJ setup, right? Because you got 1 high, 2 high, 3 highs. Here's the 4th tag of this level, and that's a market structure bottom if you want to trade it. So it's there, I'm not going to argue it. If we go down to the lower time frames, let's really see what this looks like off the lower time frames. Well, there it is. So that is that high that if we break through it, but I could argue if you want to, there's a W there you could trade. And this also even sets up a nice little bot, if I'm not mistaken. So there is the reload zone. If this fails and is AB equals CD, it's going to take us down into that reload zone. But if this is a bot setup, right, 33%, but no more than 66, so that's valid. Let's crisp this up. And then clone that. All right, what do we got? And there you go. So, remember, strong convictions, loosely held. If bot is in your trading plan, we got one low, we got two lows. If this comes down, puts in a double bottom and heads back up, I think you got yourself a trade. And as well, like we said a moment ago, and you can even sort of see it just off of here. If we go up through this high, that's a double bottom, right? Which was set up a, let's see, can we get that? Well, whoops. I wonder if this will line up. Let's see. Yeah, there you go. Oh, not quite. Yeah, wishful thinking. Yeah, okay, so that doesn't really set up an LJ, but, well, 1, 2. Oh, it's not quite, almost. There it is. That's still close to a third. And I think if you break out through this W, I think it's not a bad shot to take looking for this move up here. And, this is also a funny commentary, too, on things like megaphones. I've wondered how and if this megaphone level has to get traded to. Maybe this is how it ultimately gets traded to. I don't know. I suppose now if we, zoom in a little bit more, this is, like weekends are kind of funny period in crypto anyway. There we are. So, okay, coin, now looking at the hourly charts. Remember, Thomas told you he was trading like a rock star. Grim was trading like a rock star. They hit this 38.2, which is a reload zone. Nice smiles, right? Divergences, yada, yada, yada. Down she goes. Came down into 38.2, and I was posting in the lounge. This sure looks like a Ray barbecue kind of play, right? RLZ ping pong. In this case, no, not RLZ, but barbecue ping pong. So I think, if anything, that's sort of what was happening here. But I thought this was really interesting watching the price action through yesterday, how the market jumped up into here. And like I said, I was feeling pretty optimistic, felt like we were going to go through the top here, and then it just stalled. And we just didn't really see any new buyers step up here. So I'm wondering whether this was sort of weekend crypto shenanigans. We had, a couple things in crypto going on. A few of the altcoins were starting to actually perk up and look bullish. And I wonder whether there was a bit of, I wonder if there was a bit of Bitcoin buying as well on this whole Trex delisting shit. Like we had yesterday was, I think it was yesterday, was Friday, was one of the days where where Trex decided they were going to delist a whole bunch of coins. Did that actually generate a whole bunch of buying interest of Bitcoin, which maybe helped and might explain why the price was bid up here? But I noticed I came back, like I said, later on yesterday afternoon, and it put in this nasty M failure here. Bam. This was a move just back to the POC. And so you can see, they washed the lows, nice little stop runs. Keep in mind, this is lower time frame, not really doing too much damage off of the higher time frame charts. 4 hours. People were even telling me this morning that, yes, OK Coin and their wonderfulness did go to new lows, but a lot of cash markets did not go to new lows. So it's interesting looking at this chart. Can you guys see how what I could see happen here now is first and foremost V bottom rally off the lows. Now we're going to set up that AB equals CD that we saw sort of on Japan. And this, let's make that nice and crisp. Do, 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 do. 33%, no more than 66. Bot is alive. I got 1 kilo. Big jump up. It did not get to 50%, so it's still alive. 1 kilo. Now a 2nd kilo. We could just politely, Bitcoin, yeah, right, good luck. But if we could just politely put in a nice little W here, damn, that's a stone cold honky. So it's there, no doubt about it. And if you are interested in trading the long side, right, keep a close eye on that trend line. Ideally, you'd love market come up to here, then come back down, and then go up. Not only will that be a bot entry level, but also be a Leanne James level. Or maybe we'll just call it LJ. Sorry, Leanne. And it's going, oh, no, I say my name every damn time. But in essence, hopefully you can see there is a potential long trade set up here. And also, too, kind of cool, just looking at this particular range, we left value. We accepted below value, then we sprang back violently back into value. So technically 80% of the time, we should go back up and tag value low. Then probably the last thing that we should sort of think about here on this chart is where did Chicago go out? Oh, hello. So it's interesting to see. I marked the end of Chicago trade right here with my arrow. We're a bit underwater. Could they bring Chicago back up so that, they basically start the trading day at roughly the same level? I think so. So I think you could see it. And, it's 11:21 here. The new trading day technically will start in about 5 or 6 hours. You could see the market move up here. Not bad. And hopefully you can see the bot levels on the Chicago boys. Can you guys see how that's setting up? So you never know. We always say strong convictions, loosely held. Look how they've set this up really nicely here, right? So same sort of thing. And I like how these lows are setting up. So we'll see how the Chicago boys, it looks to me like the Chicago boys are, they set them up with a trade here. Oops. Okay, now what the, can I do that? No, doesn't like that. All right, let's go like this, like that. There we go. All right, I'll just leave that. So you can, and interesting, look how the market topped out through that event and failed there, came right back down against these lows, and look at the tight little bottom it's trying to form in here. So, just be flexible. If you're trading this market, be flexible on both on the long and the short side. And I'm kind of leaning, believe it or not, towards bullish setups here heading out of the weekend. Well, we'll see how it goes. There's a lot of fun level tours. We did some work with WD GAN on Saturday. So this is the kind of stuff that I'd like to see the level tours be concentrating on here over the coming week. If we zoom in, here's some really cool levels on this is the Tether. And what I noticed was one of our students, Zach, is really rocking it with the GAN levels, and he pointed out an 8-to-1 and a 2-to-1 that seemed to be coming into an apex here. So if you happen to see the level tours posting lots of GAN charts on the general site chat, you'll understand why, because they're hip deep in GAN right now. All right. So hopefully that gives you a pretty good idea what I'm thinking about Bitcoin. Bitcoin's at a very interesting crossroads right here. I would ideally, of course, I'm a bull. I would prefer to see the market move up. Market's going to do any old damn thing it wants. I personally still looking for this megaphone tag up here, and then our final capitulation. But we'll see. Only time will tell. And also, too, if we do get this move up top here, I wonder if this sets up an interesting trap against this this high here. I got a feeling that there's going to be a short-term trade. It's going to be a burst, but you know, you got to be ready, willing, and able to take profits on it. So don't approach this trade lightheartedly. This is going to be a serious high-octane trade, I think. And then, of course, the market just can crap right out through these lows and nothing develops. So keep that in mind. The wind, if you will, is still in the market's face, not at its back. Okay, so hopefully that helps with people's questions on Bitcoin. I know it's awfully difficult right now. This is a tough time for Bitcoiners. If you're a bull, then you just got to sit back. And really, you know, honestly, if somebody on the street was going to ask me my opinion, this is exactly what I would say. I would say if you are a bull of Bitcoin, then you want to focus in on reload zones. You know how much I love line in the sand, $4,000, Kavarkinators, leper Kavarks, all down here. Just have your orders working. If you are a bear, I don't know whether this is really the best trade location to be shorting. It feels like no, it isn't. But you cannot push a chain. You just can't. It's impossible to push a chain. And so what I would simply say is right now, we're all from Missouri. If you are a bull, show me. Put in this W, and we can start working our way back up top. But until W's start to show up, I'm skeptical. And I really think that is exactly the message I would give anybody in the public. There's no hurry here right now with Bitcoin, and we just have to be patient and disciplined and don't force anything. You cannot push a chain. And of course, everybody goes, "Oh, that's shitty, man. That's not what I wanted to hear. Fuck you, man. I'm not going to subscribe to your newsletter." Investing so cliche. All right. So we talked all about that kind of fun stuff. Talked lots about stock market. I really, you know, I've talked to you guys about this before. I really believe that this is now what's called a coin pickers market. You know, a year or so ago, probably, you know, when most of you joined trading and said, "Hey, you know what? I can do this for a living." You were in a Jeremy. Do you remember we used to always say this is a market where a rising tide lifts all boats? Do you remember that? We're not in that kind of environment anymore. And now is the time when you really need to sharpen up your trading plan, sharpen up your rules, sharpen up your fundamental screens, be very disciplined in hunting setups. And if anything, I think right now is we're in the environment where you have to really hoard your money, right? And you have to say, look at market, whoever you are, if it's Block Mason or if it's Quark, right? If you want my money, you got to make a damn good case for my money. That's the kind of environment I think we're in right now. It can be technical. Lots of people make great money on shitcoins that technically have set up and they're ready to go, and you can bang out doubles very easily. It can be just purely fundamental. I really believe in this story. I believe in the team, but I don't think we should be doing any leveraged, heavy margin, you know, throw half my portfolio at an idea unless you have a seriously good technical argument. The sad part about fundamental stories, of course, is that they always look the best at the top. And people get sucked into sort of the pie in the sky. Oh, but we're reinventing the wheel. We will be worth billions of dollars down the road. You better get in now while you can. Fundamentals for me in this kind of market is where are insiders getting long? where is value on your name. Technicals in this kind of market is where are the last W's? Where did this market bottom previously? And can we expect to see those same players come back in and defend the market again? In crypto, because this is unregulated, you got a whole bunch of extra hurdles that you have to deal with. Nobody said this was easy, but banging out 10x return, that's not normal either. And you usually only get, the 10x, 20x, 100x kind of stories in venture capital. At the same time, too, we have to understand that, and we've quizzed you guys before on this. If you're going to play the venture capital space, you got to understand a huge majority of these ideas will die. They will not work. Something like 80% of all small businesses fail. So if you invest in a wide swath of small businesses, you have to expect a good chunk of them are going to go belly up. But at the same time, too, the ones that do perform, oh boy. I think if we, sharpen up our plans, sharpen up our reasons, sharpen up our fundamental criteria, I think that we can get those numbers up into the 60-70% accuracy. If you're going to do little old ladies and second cars and third cars and fourth cars and fifth cars, then you have to understand a lot of the time when you're buying, you're just going to simply buy against lows and just do nothing, right? And just sit and wait for the market to turn. I believe, and our track record has proven over time, that works very well in this space. Easily 60-70% win rate. But at the same time, too, everybody here has to understand, I got a whole shitload of dogs, right? And most of the names that you see on the Bitrex shit list that they're going to turf off of Bitrex here shortly, most of them already were delisted forever ago. And it's just that they for a while, they had a courtesy policy where they weren't going to just steal your coins. It looks like they're going to go back to, fuck it, we're just taking these coins and we're just throwing them in the garbage. I don't know what's going to happen. And if we find out down the road that Trex does relist some of these names, they're probably going to face lawsuits over it. But we'll see. Unregulated space. It's just the way the cookie crumbles. If you're going to play in this space, try and make sure you have outs, right? Whether it be the coins listed on other exchanges, whether it be I'm going to download the wallet and keep it on my computer, whether it be I'm going to download it onto the Central Coins wallet that I bought it off of. Things like I had to do that with, I don't have the list here. On the Omni wallet, there's about like that Project Decorum. I had to move that over there. So you have to, either, MTL, I moved over to Binance. So same sort of thing. Club, yeah. Dan, what happened to Club? There's my Club right. Oh, that's not it. There's my Club right there. Great. I now have Club running on my own computer. But at the same time, too, right? The irony of it all is that I've seen repeatedly in the past that just because the exchange has a hissy fit over the coin, that doesn't mean you still can't make money on these things. I could show you at least a dozen different coins that I've either moved to Yobit or Cryptopia or hell, I've even moved tokens now to OKCoin. When OKCoin was primarily our forwards contract platform. Polo, Binance now. Just try and ensure that you have outs. And if you got to take a punch in the nose because your coin idea didn't have an out, well, this is the whole reason why we don't risk more than 5% of our stake on any one single idea. So, 2017, it was all fun. It was just so easy, right? In 2018, I think we're all being schooled that, hey, this is hard work after all. both surviving and maintaining your capital base and actually expecting to see that capital base grow through these kind of environments is very difficult. And my advice to all of you, if you really want to learn how to survive in this long-term game, is sometimes there's an old adage that goes, the best offense is a really good defense. And, that's why, TRI alone, we have, probably about $150,000 just sitting on the sidelines doing nothing. Sometimes a really good defense is the best offense. At the same time, too, though, I do have a bunch of Bitcoin sitting around the various exchanges, and I'm just picking off these names as they come along. The irony of something like this, if I buy this at 1130 or whatever, even right now, and Bitcoin falls in half, where is my break-even level on this investment if Bitcoin falls in half? Well, ironically enough, that's just right there. That's assuming Bitcoin's going to fall in half. I'm not assuming that, but it could. Is it realistic at some point over the next 6 months to look for that gap to be filled in? Remember we said V tops and bottoms are unsustainable. At some point, this top should be tested. And if this thing actually is a bull, we should actually break out through the top of this top and make a higher high. So is it realistic to even consider that maybe this gap up here will be filled in? Sure. How about this gap right here? Sure. How about this gap right here? So if Bitcoin falls in half, even on this gap, well, that just basically my money hasn't done anything. I haven't lost half my money in Bitcoin. I'm just sort of scratch. If we go up into these areas, Bitcoin falls in half, well, I'm actually making money. So I would actually look at this in a weird sort of way. You can look at in taking your Bitcoin and buying these as another way to sort of diversify and hedge yourself if Bitcoin does have to fall another 50%. So, and I think actually I've been buying quite a bit again. All the stink bids that we put in back in December when the market was going crazy, all these stink bids are slowly getting filled. I got filled on this one against these lows the other day. Just another great example. Again, where is a double on this thing? Well, a double is right up into this area, right? If Bitcoin falls in half, and this thing actually, and we said, from these levels, a double is here. If this thing can go up to this gap, and I can sell at that gap, and Bitcoin falls in half, I'm actually making money with Bitcoin falling in half. I'm not saying Bitcoin's going to fall in half. I'm not saying it's going to stay there. But this is just another example where I can offset the Bitcoin falling in half just by simply looking at stories that got good upside potential here in the short term. And check this out. What do you think? Does this thing have any kind of potential to make any kind of money down the road? Isn't that fun when you do that? You go, oh, shit. Isn't that cool? So, I love, and keep in mind, this is the only business when stuff goes on sale. Nobody wants to buy, but hopefully all of you look at this and go, well, I can understand why Brian's getting interested. That's how you run a business of trading in venture capital. Nobody said it's easy. Don't get me wrong. Nobody says this is easy. But maybe this is why you, are watching these videos and trying to learn from a guy who's done this for 20 or 30 years. This is basically what I did to take $500. And I don't even know what it's at right now, but even if the account's only a couple $100,000, I know we've got 150,000 in cash. But even if the account's sitting at, I don't know, let's see what this thing says, because I know this is broken, but let's see, 250,000. I mean, even from $500 to 250 grand, that's not so bad in 4 years, eh? And this is with all of these altcoins here. If we go back into any kind of market that we saw last summer, and can everybody now see the seasonality of this market? Can you see April, May, June, July. This is just 1 year. So if this market actually does anything, even if we just do 50% retracement of last year's rally, we're not even going to go to new highs. We're just going to do natural 50% bounces. Can you see how this account could just go absolutely insane here? I mean, maybe this number doubles with Bitcoin where it is now. So, oh, look at that. I bought some more. Look at it. I'm buying stuff all over the place. How old is this? March 18th? Oh, no, that's old. Oh, geez. Hey, this is really irritating me how broken this is. When can we get to the new website, guys? You're killing me. So I thought this was updating, but I can show you guys here. What have I been buying lately? And this thing might time out again. I hate how it times out so often. Yep. Jerks. All right. Now I got to get a secret code. BitterX. Oh. Okay, let's see what we've been buying recently. I've just been nibbling away on almost everything. We bought some Quark today. We bought some Game, PTOY. There's our Potcoin trade we had the other day. SRN, XEM, TIX, CRB, LGD, BLK. I mean, I'm buying. And this is the classic, buying when they're crying. And Brian, he's going to be out there banging out doubles, right, into the seasonal spring peak. And when I'm banging out doubles, everybody's going to be like, oh, man, how's he doing that? How come he's getting all these goddamn doubles? Okay, I've been ranting on here. I no idea how long we've been going. Is anybody getting any value out of our conversation today? Hope so. Well, that's good. All right, why don't we wind this up? I see somebody's asking us to look at BRK. Let's see what we got there. I mean, Jesus, they're just names after names. Look at this one. Somebody posted this in the lounge. I was like, damn. And there's a couple on Binance that I've been buying as well that have been popping up here recently. Some really good looking little coins. So get ready, guys. I'm feeling like, we're not there yet. You guys remember, I told you guys, does anybody remember what did Brian say was sort of the date that I thought that maybe we could start seeing some sort of floor come in? Jeremy, you should know this. I don't know. I think. What the fuck? What are you talking about? I don't know. For some reason, I thought you were a pot guy. Anyway, I've noticed quite often okay, there you go. Merry Christmas. I've noticed often in the market, I've been playing this game now for 4 years. The market seems to like to find some sort of footing around that April 20th date. And I'm, my feeling has been the same all since. And if anything, I'm a little worried, our conversations about Bitcoin, I'm a little worried that they get everybody all excited and the dump into April to mark the seasonal low. But anyway, with regard to altcoins, I can definitely see that, maybe we swim around, fuck around with these lows here just to mess with people's heads. But I can definitely feel we're getting closer to the bottom than the top. The top is a long, long way away now. Okay, so let's take a look at a couple of your ideas and just give you my 2 cents and send you on your way. So BRK or BRX? What was it that you wanted me to look at here? What the hell is that? BRK. All right, what did I put here? BRK breakout. Well, the irony of it all, and I don't know, Jian Town. Jian, what am I pronouncing your name? Nick. All right, Nick. The irony of this game is you should be able to look at this chart, and everybody watching this video should be able to look at this chart and tell me what Brian's doing right now. You guys have been here long enough. You should actually be able to write the commentary in. Well, we're coming in against previous lows. Is that a buying window or a selling window? Buying window. Yeah. You can see that somebody has tried to defend this thing egregiously down in this level. So, as Will points out, nanny nibbles, perfectly acceptable. I wouldn't even be surprised too if we put on momentum indicators that we're going to start seeing signs of divergence develop here. So let's go see if we get any signs of divergence. See, my ultimate goal is to train and teach all of you guys to be able to write my script for me. If I can get to the point where you guys already know exactly what I'm going to say, then I've won. Actually, I see a lot of really cool things here. It is interesting to see this bigger, sort of longer term divergence here. That's a big one, eh? Look at the size of that. And then this huge divergence. So there is the smatterings, and I don't know whether we can still call this confirmed. I don't think we can call this confirmed because it would imply that we have to go up through there. But I could definitely see, there's something brewing here, there to there. And there to there. And of course you got this big honking W, bang, bang, bang here. I think you want to have some serious confidence that this divergence is in. I think you got to wait for this level here to be taken out. Like so. And, if anything, this is a really good commentary on grade 3 English teacher. Like, this is beautiful. She looks at this W and she goes, A+, way to go. Did see a lot of people recently that have come to me and sort of said, all right, Brian, here's my momentum divergence. And it's like, oh, that's tough. And sure enough, boom, right back down against those lows. So, in fact, I even had somebody this morning asking me about it. Really, what I want you thinking about is symmetricality. And I don't even know symmetrically if I like this or not. I don't, it's a bit, my mother used to use the expression cockeyed. If anything, what I'd love to see is this thing come down and put in another divergence like that, kind of like this W here. But nonetheless, if we do pop up through the top here, there is a div that's established. And that's a good sign. Right? It means price is stronger than what price would lead you to believe. We already talked about location. I do like the idea that you can actually sneak in below value here. That's awesome. We got an old buddy of mine, Hogue, who used to live by basically buying below value. I suppose you could argue for the aggressive traders. There is a cute little inside bar reversal and a fractal that's working here off the lower time frames right there. The issue with that is, if you did trade that, really what you're looking for is 2 to 1 off of the fractal. And then at that 2 to 1 level, wherever that is, so right in there. So in essence, do you see how all that is just going to be a revisit, filling in this notch here, revisit of, 200 SMA, there's the 30 SMA, and, there's this node right here. So if that did play out that way, then you want to sell half, maybe even 3/4, book the profit, and then move your stop to scratch on the remaining and see where the hell this takes you. So I could see that trade there. That's not bad. I think, though, this is a really good example, and I see a lot of this from people lately. is they look at this entire range from this low all the way back up to this high, and they go, okay, well, I'm going to use a 50% level because Brian says use the 50% level as a target. And then I'm going to take this and I'm going to go, all right, there you go. There's my nice, what is that? I can't even see it. It's ridiculous. Almost 10 to 1 risk reward. We had one of these sort of set up on ADA recently. And I like to call this like the big hairy ball sort of trade setup. You're kind of, bulls make money, bears make money, pigs, what happens to them? And I don't know whether it's really realistic to use this kind of price objective and have this kind of risk reward setup off of this, because you're probably going to see, if this really does work, you're going to see the market come back up into here. But then you might see the market just roll over and come right after your lows. And that would really suck if you left, a nice good 2, 3 to 1 risk reward. If you left those kind of profits on the table, that would be very amateur. So, if anything, let's try and remember, if we're going to use 50% rules and we know what our risk is going to be, maybe ask yourself, what's a realistic 50% level? And do you see how if we go after this high, just down to this low, then we do the 50% level? Do you see how that lines up almost perfectly with the 2 to 1? And so to me, when I see this looks to me like a very manufactured trade. This looks like somebody purposely designed this trade to get this level. And then, of course, we had some conversations about institutional fingerprints recently. So this isn't actually a bad example. This is a market structure failure. M's are bearish. We can clearly see that the market tried to turn back a bull, the bar that made the high plus the preceding bar. But somebody came along and absorbed all that buying. Then the market rolled over because they knew that this was a bear. So does it make sense that they are going to now defend their short level? And gee whiz, the bottom of that zone, previous M structure, 50% rule, what a coincidence. It just so happens to be almost exactly a 2 to 1 off of this low. No coincidence at all, in my opinion. So if you're going to trade these, let's try and keep the profit objectives realistic. And it's not an accident that a lot of these trades set up produce 2 to 1 risk reward. That's sort of like industry standard. So what do you think, Nick? Did I give your idea justice? Yes? All right, good. The cool part about it is if we start getting some half decent looking W's, right, we can really seriously, maybe not like that, we can seriously think about not only this high being tested down the road, but, we zoom out and you can see, wicks and tails like to be eaten. And gee whiz, there's May, June, July, right? My hunch is next silly season, you're probably going to get a shot for that. But if you're trading these short, that kind of move, then you want to be nanny nibbling. You're not going to get too stressed about getting stopped out here because we could still have some fuck yous against these lows before that ultimate bottom comes in. Look how they did it here. Right here might be a really good sort of similar example where, yeah, there was a cute little setup. There's the 50% bounce. So traders are taking profit on that rally, and then they just roll it over and put in a new low. Right? And then they do it again, another new low. But then eventually it has its run. So, don't, like I said just a minute ago, if you're trading this shit, don't be greedy. 2 to 1s are awesome. Keep banging out those nice wins. And the risk on this inside bar is what actually sets up that 2 to 1. And I don't think it's an accident that happens to line up nicely with that 50% roll. Okay, there's a couple requests here, so let's just get these taken care of, and then we'll head you on your way. I noticed that I think we did core, and I seem to remember we did MOD. I noticed that Verge is trying to perk. Excuse me, is trying to perk up XVG. I don't know whether I want to buy any more of this. I know a lot of people like this name, but I'm long from 2 sats, and I made really, really nice returns on this investment. So I don't know whether I really want to reload on this thing or not. I know they have a bazillion, gazillion, jazillion coins out. So if I was going to trade a setup, it better be damn fucking good. I noticed that it looks to me like we might even be getting a potential LJ setup here. We're trying to break through this secondary trend line, which is always encouraging. I would have liked to have seen 3 nice crisp tags of this trend line, so I'm not sure about that. We get moving average confluence. That should be a bit supportive. Remember we talked a bit ago about those wide divergences? This isn't terrible. Boom, right? It's trying to confirm that. But I don't know. I don't really have the best structure to work with off this thing. So if anything, what I'm kind of thinking is, all right, we broke the trend line. Maybe we have to come down, tag the trend line from the other side. And really what we want to see is give us a nice W. So I'd also say too, horizontal support and resistance. We really should expect these highs to trade back to. Notice when we zoom right out, you can see where the street really is long this name. So, we're kind of in no man's land here. I think if anything, coming out of the weekend, we saw a little perk up in a lot of these alts. So if anything, I'm thinking it's that sort of perk up, if you will. Probably just like we did off of that last story, if we do 50% ranges. We do here to here, my hunch is we're getting up into 50%. Let's see what that looks like. All right, we could go a little bit higher up into this wick. Yeah, I can see a bit more play up here. I also see too, there was obviously a key tail low. The market dumped. Somebody bought through here. Market turned back up, then failed. So these guys were trapped. And the counter trend rally up into that level is releasing those bulls. So no W yet. We broke a trend line. Don't really have a confirmed divergence yet. It's trying like the dickens. I think, just like we said, if we have to wait till the middle of April for this thing to put in its bottom and we get going for the spring, that wouldn't surprise me at all. And, ideally, I'd love to see these lows hold and put in a bottom against these lows. And if you see that, fucking post a chart on the site because I will go and buy that if we get that. But it doesn't happen all the time. That's sort of like, like your bulletproof setup. So just keep your eyes out for that. Right now, all this is a V bottom. I did notice this. I like to watch these ones that have US dollar proxy. And I noticed that this guy is on the list right here versus US dollars actually looking very similar. So it's just V bottom. And we're probably doing this 50% retracement right now. So notice the 50% level is going to be against that original breakdown there. I wouldn't be surprised actually if this is like a 38.2. Yeah. Oh, look at that. Pretty damn close. So if anything, great analogy of Ray's barbecue there, right? So it's a cute little fractal. It fired 1, 2, 3, 4, 5, 6 days ago. But way too late to be thinking that. And if anything, if you wanted to try and play this on the long side, I would be hunting for reload zones down here. The way down there, right? And then throw in your RLZs, all right? So that would basically be hunting against this, though. Oh, hello. You guys see how there's a little gap? There's one right there. That one's been filled in, so that's good. I think there might be one right there. So that one was filled in there, but this one is still open right there. And this is pretty clean all the way up here, so that's good. Yeah, if you're gonna work a bit on this thing, I think you want to go right there. Where's that? Yeah, right. Maybe a nice little fuck you stop run against all these lows here. It's not a bad area to think about shopping. All right, so nothing really of urgent, oh, I gotta do something right now. Just, it's not there. Okay, what the heck you got here? What's this? Vibrate, VIB. Nice level. Nice divergence. Oh, W comes in here. Think you got yourself a trade. In fact, actually, I just talked to you guys just a minute about finding the W on the test of the low. Oh, did it already go? Oh, that's too bad. So anyway, whoever was asking, looks like you were definitely thinking in the right direction. Let's see what happened. Well, it's not crazy. Where was that? Over here. Where did that chart go? Way over here? All right. Nope. Here. Yeah, here we are. So this is on Binance. This is the daily chart, very orderly. So it looks like, I think that was sort of like right in here, right? So let's see what happened here. All right, why does my chart not look like your chart? Vibe, VIBO. Maybe you're looking at it versus dollar? Nope. Huh. Oh, my chart doesn't look like that at all. What am I missing here? Anybody have any idea what I'm doing wrong? It's VIB. What did I put in? Oh, VIBE. Yeah, there you go. Brian's a stupid. That's all. No big deal. Oh, look at that pretty little W. Hi, little pretty little W. So the cool part about it is hopefully you guys see that when you are asking about these names, you guys already intuitively know. Most of the time, we had one gentleman who came on the site last summer. And right into this summer, he was asking, hey, Brian, can you look at these coins up here? And he learned very quickly that don't ask Brian to look about coins that are up here. And, poor guy. I mean, he had to learn the hard way why we can't look at the market that way. I think he has learned now, and he's gotten religion. So way to go, you, and you know who I'm talking about. But what's actually really cool is most of the time when you guys actually ask me to look at a coin, it's probably very close to a buying level. So on this one, and really hopefully all of us look at this and go, motherfucker, look at that W. Can you guys see that? Pretty. And really, this story isn't over. We can always drill down. I mean, beautiful internals here. Look at these internals. Nice div that's actually confirmed here. Another div is confirming again. Looks like volume is trying to break out. And on this pullback here, there were no sellers. I mean, we used to have a site member, Jonathan. He was a German guy that worked here in Canada, just like a slave for this guy. And then we went and taught him how to trade, and he just made a shitload of money, and he moved back to Germany. Now he's like a landed aristocracy there. So, Jonathan, I hope you're doing well, sir. But anyway, he used to tell me, Brian, fucking put away price momentum. All you got to do is just find OBV charts that look like this. This thing's going to fucking go crazy. Isn't that nice and easy? I mean, just easy. It's just that simple, guys. And the irony of it all is I don't think that this is over. Right now, if anything, what I want you to do is, we're not going to chase. We're going to go down to the hourly chart, and we're going to draw some fibs, just like I did on that idea earlier. Where is the lowest low? It looks like it's down in here. We're going to draw our fib, and what a coincidence. This is an example of our Kavark, right? Shark, whatever you want to call it. But Kevin, he really liked this. 78.6 tags off a previous structure. I don't have a problem working a bid there, and gee whiz, you can see there's a big old gap that needs to be filled in just above there. You want to work your bid down in this area here to start buying? Perfect. Awesome. You can see there's a cheeky little island bottom right down here. So there's definitely some unfinished business all the way down here. No reason why you can't work a bid there. Whoops. I'm not quite sure what we did there. Boom. All right. And I see there's another gap right here. Work a bid right there. So you got like a whole bunch of levels that you can work a bid at. I don't know, all of these. You want to maybe even take you're going to buy 4 lots and just break them up. 1 quarter, 1 quarter, 1 quarter, 1 quarter. Perfectly fine idea. So just because the coin actually, and this is good, guys, because what I like about this is the bottom has actually come in at the bottom of value. You can see there's going to have to be some backfilling to fill in the profile here. This trade, I think, is just starting. So, work your bids. Just be patient. No reason why we can't think about buying that. Good-looking little coin. In fact, I think I'll just go ahead and do that right now. Where is this? Is it on Trex? Do I have any orders? Let's see. VIB. Nope. Nothing there. No, let's go VIB. Vibrate. Brr, and it's being delisted. What? Don't chase, that's for sure. I'm not like the offer right now is $21.28. I certainly wouldn't want to pay that. But am I willing to pay $17.77 for some? Sure. It's going for, I'll do 4 orders of 0.02 each. 0.02. If I can get filled. So we'll go bid. 1778, right? That's the top of that gap. Where's that gap? Close. 1777. All right, so 1778 should give me a fill. 0.02. All right, that works out to 1100. Okay, so we just get some on the books. And then our next level. The old structural level, 1729. So I'll go 1730. All right, and that comes out to, let's go. $1,250. Let's go 1,200. All right. Boom. In she goes. And next one, we'll go off to this island. 1625. And let's go maybe 1,300. About 1,250. All right. Boom. In she goes. And last but not least, 1604. 1605. All right, so this is what I would consider sprinkling your orders. Just like that. So we'll see if we can buy up about 0.8 of a Bitcoin of this thing. And that's the way I would suggest we do this. Okay, I think we'll probably leave it at that for today. I've been blabbing away for about an hour or two. I guess we'll have Thomas in the house first thing tomorrow morning. So we'll get a nice sort of sexy rocking and rolling update. Over the short term, still think that Bitcoin really is dominated by which chart do I want to show you? It's one of these. This one. No. Maybe it's this one. Don't think that's that one. Nope. Yeah, I thought it was this one. Nope, no, it's not that one. Yeah, where the hell did it go? Oh, here it is over here. All right, here we go. All right, so I think Bitcoin right now is dominated by a top in Japan of 94,590. I'm a nice friendly number. And the bottom is 87,5320. And I like the idea of the market catching a bid heading into the week to validate this megaphone. That's just Brian's opinion. So we'll see what happens. Okay, guys, I think I'll leave it after that for today. Hope you had yourself a great day. All the best, and wish Liam and I an awesome afternoon playing in the rain here in Vancouver. All right, guys, have a great day. Toodaloo. Bye for now.